This video is the first episode in a 7-part Alpine Hodler series called The Roots of Bitcoin. If you want to understand Bitcoin on a level that most people never reach, this series is for you. The idea for this series was inspired by a simple but powerful image. The image shows Bitcoin as a tree. Above the ground you see the part the world pays attention to, the price, the users, the adoption, the freedom narrative. But below the ground you see hundreds of roots, the real foundations that keep Bitcoin alive. Most people never look down there. They only see the price moving on a chart, and they see the hype and the fear. But they never understand why Bitcoin survives every winter. In this series we go beneath the surface. We explore the core ideas that make Bitcoin resilient. And by the end of all 7 episodes you will understand Bitcoin with more clarity than 99% of the market. There is one guiding line for this entire series. Deep roots are not reached by the frost. Today, we begin with the deepest root of all, incentives. If you prefer clarity over chaos, welcome to the sharp side. Before we talk about Bitcoin, we need to understand incentives themselves. Incentives are the forces that shape almost all human behavior. They influence cooperation, competition, work, risk-taking, and even morality. When incentives are aligned, systems strengthen over time. When incentives are broken, systems collapse. You can see this in the world around you, in politics, where incentives reward quick wins instead of long-term thinking. In banking, where incentives reward taking risks even if the downside falls on others. In corporations, where incentives push for quarterly results instead of lasting value. Incentives are more powerful than rules, more powerful than hopeful intentions, more powerful than leadership. Bitcoin is the first monetary system in human history where every major incentive is aligned. Every actor in the system benefits from following the rules, and every attempt to cheat the rules becomes more expensive than obeying them. This is the core of Bitcoin's resilience. Imagine Bitcoin had been designed around trust. Imagine Bitcoin depended on everyone being honest or moral or cooperative. Imagine Bitcoin required a leader with good intentions. It would not have survived a single decade, probably not even a single year. Human systems fail when they depend on trust alone. People change, governments change, companies change, leaders change, motivations change. Bitcoin avoids all of this by turning honesty into the most profitable behavior and turning dishonesty into the most expensive behavior. This is the real genius behind the architecture of proof of work. It is not based on trusting people. It is based on aligning their incentives. Let us start with the miners. Miners are often misunderstood. People think miners support Bitcoin because they believe in it. But miners support Bitcoin because it is profitable to do so. Every 10 minutes, miners receive newly issued Bitcoin and transaction fees. But they only receive this reward if they follow the rules exactly. If a miner tries to cheat, the network simply ignores them. Their electricity is wasted. Their hardware earns nothing. Breaking the rules is punished. Following the rules is rewarded. The incentive is simple. Secure the network and you earn money. Try to attack the network and you burn money. Bitcoin does not ask miners to be moral. Bitcoin designs the system so that miners act honestly because it is in their best interest. Now let us look at the nodes. Nodes do not earn block rewards. Nodes do not compete. Nodes do not collect fees. Nodes have a different incentive, self-protection. If you run a node, you verify every rule of Bitcoin personally. You do not trust others to tell you how many Bitcoin exist. You do not trust others to tell you which transactions are valid. You check everything yourself. The incentive for node operators is simple. Protect your money by verifying the rules. This creates a balance of power. Miners produce blocks, but nodes decide which blocks are valid. Nodes are the rule keepers. Even if all miners tried to collude and change the rules, your node would reject their attempt. This is why Bitcoin cannot be seized or rewritten by a large miner, or by a government, or by a corporation. The incentives of miners and the incentives of node operators create stability. Now let us look at holders. Long-term Bitcoin holders are often seen as emotional or ideological. but in reality their incentive is extremely rational. Bitcoin is the only monetary asset with absolute scarcity. There will only ever be 21 million Bitcoin. Nothing can change that. Demand increases, supply does not. This means holding Bitcoin is a long-term strategy that aligns perfectly with the design of the system. No dilution, no unexpected inflation, no central authority altering the supply. With Bitcoin, the incentive is simple. Hold and benefit from long-term scarcity. No active management needed, no trust required. Bitcoin rewards patience. Now let us examine the incentives of attackers. What happens if a nation-state or a powerful actor wants to attack Bitcoin? The answer is always the same. The attack is more expensive than the reward. To attack Bitcoin, you must buy enormous amounts of hardware. You must pay enormous amounts of electricity. You must compete with miners who already operate efficiently. And even if you produce the blocks, nodes will reject them unless they follow the rules. Bitcoin is protected because the incentives make every attack irrational. It is always cheaper to follow the rules than to break them. This is the opposite of fiat systems. In fiat money, the incentive to manipulate the system is extremely high. In Bitcoin, the incentive to manipulate the system is extremely low. When we talk about incentives, we are talking about the deepest foundation of Bitcoin. Every other feature of Bitcoin grows out of this root. Proof of work, scarcity, decentralization, mining, halvings, network security, holder behavior, node verification. All of these elements work because the incentives are aligned. Bitcoin does not require trust. Bitcoin does not require leadership. Bitcoin does not require central authority. Bitcoin requires only one thing: aligned incentives that reward honesty and punish dishonesty. This is why Bitcoin survives every winter. This is why Bitcoin has no central point of failure. This is why Bitcoin cannot be corrupted. And this is why Bitcoin will continue to outlast every system built on trust alone. Deep roots are not reached by the frost. This was episode 1 of the 7-part series, The Roots of Bitcoin. In the next episode, we explore decentralization, what it means, why it matters, and why a system without a center is impossible to shut down. If you prefer clarity over chaos, subscribe and join the sharp side.